Somebody remember this bop right here. Sing it. 1, 2, 3, go. Martina, I appreciate it. I appreciate it. Cameras on, cameras on.
Long overdue, but now Philly slamming. Boys to men, ABC, BBD. The East Coast family never skip the beat. South Street, just like Ben, plenty of friends, and all the Philly stations.
Sing a song for me. What's up, Miss Stacy? I see you, Stacy, in the chat. What's going on, beautiful? Miss Sabrina, I see you. This Sabrina's iPad. She got to be clear. This her iPad. You're not talking to Sabrina. You're talking to her iPad. What's up, Miss Sabrina? Let's go. I'm going to take y'all back before we get started. Let me take somebody back tonight.
Yo, these 4 new jackets real smooth on a hot tip. Make Mike shine.
Y'all remember this pop right here? That's right. That's right, Kimmy. We getting that tone set tonight. Let's go.
I looked at you. You stole my heart. You are all that I do.
What's up, Miss Sophia on the check-in?
Every part, but I knew love would be complicated.
Dominic, I see you, family. What's up, brother? What up, Edward? Cameras on, cameras on. Y'all scared to have a good time while y'all chasing that bag. Y'all scared to have a good time and sing. Let's rock. We rockin'. Okay, y'all know that one. Let me see if y'all know this one. It's a vibe on a Sunday night. Let's make sure those cameras is on. We getting ready to get into it. We're going to get my brother Lawrence up to the stage. Once again, it's that Stock Options and Storage Unit Summit 2025. We got another 4 minutes before we bring Lawrence up. I just want y'all to catch a vibe. Get those cameras on, cameras on, cameras on. We're going to be highly interactive. High energy equals high results. If you know these songs, I want you to help me sing along, okay? 1, 2, 3, here we go. What's up, Miles in the car? What's up, Miles? We excited. We gonna finish this thing how we started. That's strong. 1, 2, 1, 2, sing it. We gotta slow it down before we get started. That's right. Make sure we got something to write with. We're going to be taking notes. I see we got some more people in the chat. I want to do another check-in. Put your city, your state, your country in the chat. If you haven't done so already, I want to know where my millionaire's checking in from. Put it in the chat if you haven't did that yet. Where we checking in from? What's up, Tampa? Alabama, Tuscaloosa, Alabama's in the building. What's up, Miami, Detroit? What up, though? Baton Rouge, what's good? Weaver, Alabama. Hackettstown, Jersey's in the building. Wilson, North Carolina's here. Denver, Colorado's here. The Bronx is in the building. What's up, Big Bronx? Chi-Town, PA's in the building. Pittsburgh, H-Town's in the house. Orlando's here. Maryland's DMV is here. Hawaii's in the building. Shout out to Hawaii. What up, Texas? All the Carolinas is here. What's up?
When you got a girl who takes her time, you must know the pace.
St. Louis, Midwest. What's up, Midwest? Trinidad is in the building by way
Ready to go. And I hope this
of DC.
you almost lost a girl who was
West Coast is heavy in the building.
that you got to know.
We about to get Lawrence to the floor.
Got to cool it down. Watch out. Gonna lose control. Gotta slow it down.
Hold on. Let's set this mood right before we get Lawrence to the stage. Cameras on, cameras on. Let's go. What's up, Will, on the check-in?
Jump on it.
Jump on it.
Keep us on it. Jump on it. Jump on it. Jump on it. Costa, jump on it.
Now, if you ready to get started, you ready for Lawrence, I want you to put a fire emoji in the chat right now so I know you ready. I know we got all age groups in here. If you don't know what an emoji is, just type the word fire for me, okay? You can just type fire. It do the same thing. Fire or emojis all over the chat. Fire or emojis all over the chat. We getting started with day one. Sunday vibes. Once again, it's that Stock Options and Storage Unit Summit 2025. Let's get Lawrence to the stage so we can get this party started. It's 8:30. Somebody say on time. Let's invite my brother Lawrence to the stage. Let's get started.
What's going on, great people? Everybody should be able to hear me nice and clear. What's going on? Happy Sunday to everybody. Man, I'm excited to be here tonight. I mean, we gotta give a round of applause to the DJ right there. He just had me teed up over here. I had these AirPods in here. I was jamming out. So what's going on? Good to see everybody in here. 200 plus on the tap in tonight. Man, so this is the first day. We're gonna kick things off the right way. You guys know I wanted to, of course, I always like to open up the show. Excited to be here. And we're going to jump right into this thing. I know a lot of people on here know me, but there's going to be a lot of people, this might be their first time ever experiencing me. So just give a little background about myself. My name is Lawrence Eggleston. I've been a full-time trader and investor pretty much since I was 18 years old. I'm currently 25. I'll be 26 in October. I first started in this journey when I was about 15, 16. So I've been in this game almost a decade now. One thing that I always teach people, right, a lot of people here have been able to, we have some BWSO members here in the house tonight. If I've made you money before, I want you to put those money bags and those fires in the chat, right? Because a lot of people, they talk theory, they give you a lot of good game and things like that. But we're about that action, right? When it comes to anytime I step forth on a Zoom in person teaching, we're about action, giving you steps to actually go take this and translate this to really make money, really change your life. And this market has changed my life. It's changed a lot of people that I've been able to teach lives. And so this is why I love to always be in spaces like this. And so having the opportunity to collaborate this week is, something very impactful for me. So for those that are new, first time experiencing me, you're in for a treat here tonight and for the rest of the week. We got some things action-packed for you guys coming up. When it comes to the stock options game, it's something that is complex, right, up front. But when you're able to be in a room like this today with me, I'm able to make it simple for you so you can actually take this information and actually make money from it. All right. So excited to be here. 250 plus people, man. Y'all give yourselves a round of applause. Some fires for showing up here. It's Sunday night. You could have decided to do something else tonight. You could have decided to, slip off and not be focused and pay attention. But you showed up here tonight. Why? Because you're ready to execute. You're ready to get this information and execute upon it. Because one of the things that I always say is you can have information all day, but if you're not ready to go take that basketball, dribble it down the court and put the ball in the hole, you in the wrong place. Like, we about action. right? And so fires need to be in the chat. We're about to load this thing up. And I'm gonna get you guys into showing you guys my proven strategy. These are strategies that I use on a week in, week out basis that actually are able to translate and help you and teach you how to get started in the stock market using stock options to be able to fund your future, right? So we use stock options to be able to help us leverage, right? How many people in here like to be able to leverage, right? Use leverage. How many people here like leverage, right? Everyone's hand should be up, right? Leverage. That's the one thing I want you to think about when it comes to stock options is leveraging, once again, the capital that you have now to go ahead and trade with companies where you spend with on a day-by-day basis. Like this game is going to shift your mind from being a consumer to being a trader. A lot of people say, well, I want to be a trader. I want to step in this realm. We're going to find out tonight if you got what it takes to step between these two ropes, right? Because this is real life. These are real companies. These are trillion-dollar companies that move up and down consistently on a day-by-day basis that you're able to pull capital from. So I see everybody's ready. I'm going to go ahead and start to share my screen here. Make sure we are set up. And I'm going to get right into this thing. Let me see. I'm going to start on pretty much this is my day one guide. All right. So we're going to go through a couple of different things tonight and some practicals. We will have another session tomorrow. So I'm excited for that at 8:30 in the morning, 8:30 to 10 a.m. So I'm not just going to teach you tonight and not show you what we do when this market open tomorrow. You're going to get real actionable steps, right, on how we actually use this market at a high level. So let me go ahead and share my screen now. And I have everything pulled up. Sure. There we go. All right. So for those that did a little bit of reading ahead, we appreciate you guys for taking that time to go ahead and read ahead. So this is day one. If I'm a beginner, starting off with 5,000 to 25,000, I pretty much put that there, but you can get started with as little as 5,000, right? 5,000 to 25,000. So what's the class objectives really here tonight? One, understanding the basics of options and how they work. Two, learning one beginner-friendly, repeatable strategy, right? Everyone put that word strategy. Also, number three, know the risk to avoid blowing up your account. Number four, have a clear game plan for turning 5,000 into a larger account over time. So whether you're starting with 5,000, 10,000, 15,000, 25,000, right? We'll break that down here tonight. Key concepts, right? I want to go over a couple of different things with you guys, right? Call options and put options, explaining the difference, expiration date, strike, premium, in the money, out the money, Greeks, delta, theta. So we're going to have an opportunity to go over that. All right. Number three, what I want to go through is buying time, right? This is super duper important. Buying time, right? So time is your friend unless you abuse time, right? So we're going to focus on time and how to make sure that you guys are setting yourself up the right way. Rules, right? Always choose options with 2 to 3 months until expiration. Avoid weekly options for beginners. Number two, buying in the money options or slightly in the money options for higher probability of success. We want to trade things that are liquid, large cap stocks, names like Apple, Microsoft, Nvidia, and ETFs like QQQ and SPY, right? We're only looking for a trade in the direction. This is no guessing, right? We don't guess here. We don't do that. We have a system that's proven. We focus on technicals. So these are just some of the things that we'll touch on tonight. Number four is identifying the trend, right? So we're going to use our daily and our hourly time frames. Number three, picking strong stocks and ETFs, choosing contracts properly and wisely. Once again, 2 to 3 months. Set entry and stop, right? So this is what I want to focus on is you have to have an entry and a stop. A lot of times people do not focus on the actual part of risk management. People are just thinking, hey, well, I'm going to rush into trades and I'm not going to actually take the time to really be, making sure that you're protecting your downside, right? So these are big things that we go over here tonight. So these are our class objectives, all right? So we're going to start off with our key concepts and terminology, and then we're going to switch over to a couple other things. So the call option, I want everyone to put a call option in the chat. This gives you the right to buy a set price, right, strike before expiration. So call options, you make money off of stock when it goes upward. Put options allow you to make money off of a stock when it goes downward. Now, every single contract has some form of a expiration date, right? Then you also have a specific strike price. So within that, you have a expiration date and a strike price. Now, you also have what is called a premium. So that's the cost to actually buy an option. So every option has a specific price, and you're going to pay for that specific option, right? So options are priced differently depending on which specific stock that you're going to look for. We're going to highlight exactly what platforms that you can actually use to go ahead and make sure that you can actually take a look options trading wise. We'll go into that here in a second. All right. So whether you have a brokerage account like Charles Schwab, Thinkorswim, right, which is combined now, Charles Schwab and Thinkorswim, which used to be TD Ameritrade, whether you're using Fidelity. A lot of people already have retirement accounts already, so you can use something like Fidelity, right? You can actually execute this type of trading. Now, to talk about in the money and out the money, we're going to highlight that. When it comes to one of my golden rules is right here, you see this on the side. We only focus on buying in the money options. So we're going to explain realistically why we focus on buying in the money options and not out the money, right? So in the money versus out the money. We're going to talk about the differences with the two here right now. So everyone, make sure you guys have your notes because we're going to highlight here right now what's the difference between the in the money versus out the money. All right. So let me go ahead and share this. So you guys are about to see something that comes over. There we go. So this is what an options chain looks like. So this is what we call a super micro computer. All right. So this is ticker SMCI. So SMCI is the ticker here. So super micro computer, SMCI. Now, when it comes to SMCI, what we have is the stock price is here at $45. So this is the expiration date. The contract expires on October 17th, right? So that's still a few months away. It fits underneath our 2 to 3 month guidelines, right? At least minimum. So anytime we're purchasing an option, we're focused on realistically buying time on our position, and we're focused on particularly waiting not until that expiration date, but waiting until our target gets hit, right? So this is a question that I get a lot of times. Well, how do I know when to buy a call option versus when do I actually want to buy a put option? That's a lot of times the main question that I get. Now, on this side of the screen, what you see here right now, we're on the call side. So all of these options, right, are considered to be, you see that word ITM, this acronym ITM. These are all considered to be in the money. Got a $40 strike, $41 strike, $42 strike, $43 strike. So you're going to see right now that this options chain is expressed essentially as a decimal, right? So this is $7.80, $7.04, $6.55. So the hack is that you always want to move the decimal over 2 places, right? Because options are expressed, right, in a decimal format, showing you each share. So what you want to do is you want to go ahead and make sure that you multiply that times 800. So each options contract, depending on which way that you're trading, can effectively give you access, being able to potentially own an equity at the specific strike price come expiration date, depending on whether you are a buyer or a seller. So in this example right here, I'm showing you the options on the call side. All of these options are considered to be in the money. Now, what I'm going to do is I'm going to show you the options here on the put side, right? So that's you're about to see this here. And this is all the options specifically here on the put side. So now you see that the puts all reverse, right? So you now see that these strikes are now considered to be in the money. So the stop price is now lower. right? The stock price is lower than 46. It's lower than 47. It's lower than 48, and it's lower than 49. So here on October 17th, this is the expiration date. So particularly right now, with this information, I'm only going to ever buy in the money options. I'm only going to buy in the money ITM. Now, the main question that I'm going to get is, well, Lawrence, why do you focus on buying solely in the money options? Well, I'm going to explain it to you here right now as we're speaking. So everyone put in the chat 3-1. That's what I want you to put in the chat, 3-1. 3-1. So there's these variables that are in place, which are highlighted specifically by delta and theta. So I want to explain the Greeks to you guys, and really my hacks and ways of actually maneuvering around delta and theta. So particularly here with delta is going to be the amount per dollar that your option increases. Each dollar that the stock drops, once again, your option increases in value when you have a put when the stock drops, right? When you have a call option, once again, you are going to see it increase in value, right? When the stock goes up, right? So call options, the premium increases the price that you pay, right? The price that you pay for that specific option. Now, delta to theta, the reason why I ask people to put 3-1 is I at least want my delta to at least be outweighing our theta on majority of our positions. 90% of our positions, 90 to 95% of our positions, I'm going to want this to be true. So you look here, October 17th, right now, the delta is here at 50 cents, right? 50 cent, 52 cent, 55 cent, but then the theta is less than 2 cents. So what does that mean? Do we have a greater than a 3-1 delta to theta ratio? For sure. So I want my delta to at least be 3 times the amount of my theta on any specific trade that I take. Now, a lot of people are going to ask, what exactly is delta? So delta is the amount per dollar that you can expect your option to increase in value. So per contract that I actually go ahead and purchase, this as, let's say the stock fell from $45 to $40, which is actually what we're projecting the stock to actually do. Particularly, you would see that the option would increase in value. Each dollar, if you do 52 times 5, essentially now that's going to go ahead and give you around $260, right? That's easy math, right? 50 times 5, then you do 2 times, pretty much easy math, right? $260. So the option cost, if we go back, let's go back here for a second, right? The option particularly cost here, put option side, right? This option right here, this $48 option was $6.55. So essentially, if this stock was to move down $5, I could estimate that we will probably be up around 35 to about maybe almost close to 40%, just as far as gain in value that the contract has the opportunity to gain in value as the stock price draws down. So as I purchase this option, here's what I now need to do. I need to line this thing up on my technicals. So this is a platform that I use called TradingView. So tomorrow morning when we get on the Zoom, I'll show you what it's like for me to do my pre-market analysis in the morning. That kind of helps me be able to get some insight on what I expect the stock to do, right? So looking here, we anticipate that right now the SMCI has a chance to drop all the way down here to about $39. So looking at SMCI, what makes me say that? Well, our technicals is what gives us insight on where price is actually going to next. So I never take a trade off of guessing, off of hope. This is where a lot of people go wrong in this space. Well, I was hoping something happened. I was waiting on, something outside of myself to make something happen. That doesn't work here. What works is you start to learn to read these charts and these patterns to be able to detect where price is going to next. So when a stock breaks below a level or may break above, it leads us to be able to see, okay, well, what technical pattern do we actually have before taking a specific trade? So since now we've seen SMCI has broken below 45.90, we've closed there. We're now anticipating that this stock price is going to continue to come downward. Now, this ties it into why would I buy as far out as October 17th and it's August 10th today? Well, the thing is that we don't always expect, anytime I get into position, I mean, and the people will, I'll let the people speak for themselves. For all my people that's in here tonight, you know, when I speak about something, position happening, sometimes it may happen. Oh, you know, it may happen the next day. It very well could happen the next day. It could happen the next 2 days, 3 days, but we don't bank on that happening. So that's why we always buy time, because we want to sell the contract way before expiration date. So let's say come, you know, maybe August 18th, we're just using this as an example now, and we come down to $39.29. We hit our, you know, below $40, and we hit our target. The stock price drops, and that's, you know, each option that we may have purchased may be up 50%. Well, what I would do is, it doesn't matter realistically to me and what time, you know, it could be 2 weeks or 3 weeks, or it could be a week. When the stock hits our target, we want to take our money. A lot of times, I think people are, once again, not actually, to me, one of the main things that I realize is people do not actually go ahead and actually plan, right? You got to plan when you're entering a trade, right? So any single trade that we take, we have a plan for, right? So this is an example of how to understand an options chain and understand the variables that are at play. So now let's go back here to this chain. All right. So our delta to theta decay, once again, is super, 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 super duper important. Now, theta is the amount of tax. I want everyone to look at theta as like a tax, right? I think everyone agrees here. You know, you hate to see your check and you see all them taxes taken out, right? Theta, at the end of the day, is a tax. There's a cost to getting into these positions. So theta decay is something that is, once again, very, 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 very important to understand. Because every single day you are paying a theta tax. So to me, when I look at theta, theta is one of those positions that you got to be mindful. You got to really be careful, right? This theta decay is something serious. The closer to expiration, the easier that it is for these options to expire worthless. So closer to expiration options, we don't really focus on buying, you know, options that are expiring within the next week, right? We don't really want people to do 0 days, right? Like that's one of the main things that hurts a lot of people. And what is a 0 day? That's an option that expires within the same day that you purchased it. So we don't trade like that, right? So this gives you a brief understanding of just really understanding the difference between in the money versus out the money. So ITM, on the put side, the strike price will always, when the strike price is higher than the current stock price, it will be in the money. So you should always buy a higher strike than the current price when you are purchasing a put option. That is just point blank, period. It's not that sometimes people make it harder to understand than what it is. It's, once again, the variables at play. Trading is a game of probability. Once again, probability. So with me combining and making sure that I'm going ahead and going in the money, buying time, once again, in the money option, buying time on my options, 2 to 3 months, having a high probability setup. Once again, what makes it high probability? Let's go back here to the charts. What makes this specific position high probability is now SMCI is broken below this $45 level. We haven't seen it get below this $45 level in about 2 months. So now, because of previous price action and the way that the stock has moved previously, we have levels. We never take a trade without actually looking at our trading views. This is a platform called TradingView. We never get into a trade without a trading view. Anybody who takes a trade without a trading view needs to see a therapist. Quick, fast, in a hurry. And I mean this so important because what happens is so many people try to get into this game and they don't understand what they're doing and they lose their money because you don't focus on learning the principles up front to the things that I'm talking to you about here tonight. Now, let's go back to this and focus on. So we focus on trading liquid and large cap stocks, right? A lot of times we focus on trading liquid and large cap stocks with what? In the money options. So the main thing that I want to stress is, once again, in the money versus out the money. When we talk about when you're selling options and you're selling what we call covered calls and cash secured puts, that's when you focus on selling options out the money. Primarily, the main goal is for us to buy in the money, hit our targets and sell before expiration date. So we want to buy in the money options. Now let's talk about our liquid and large cap stocks, right? And ways that as a new person, you're coming in and you're saying, okay, well, how do I find simple stocks? How can I simply find stocks that I'm looking to trade? This is a resource which is called ETF.com. So everyone pull up ETF.com here for a second, right? ETF.com is going to be your resource and your guide. You have three main ETFs, three main ones, right? Not the only ones, but the three main ones that you have. And so when I go back to my start in this game, I go back to 2016, 2017, and I think about all the things that, you know, as a new person, some of the stuff that I just didn't know at the time. You know, you come into the game and you just think that, hey, this is just going to be quick money. This ain't quick money. This is discipline. This takes time to understand this information. And so the three main ETFs, SPY, SPY, that's going to be your first one. So you can type in the SPY here on ETF.com. And what you want to do is you hit holdings. So once you type in SPY, you hit holdings. All right. Now you come down and you're going to relatively see the top companies in the world. The S&P 500 is our bread and butter. So these are going to be your top. The first tickers you're going to see are your top 10. But this ETF is made up of 504 tickers in totality. All right. So you have NVIDIA number 1, Microsoft number 2, Apple number 3, Amazon number 4, Meta number 5, AVGO number 6, Google number 7. Google has Class A and Class C. Then you have Tesla, Berkshire Hathaway B, JP Morgan Chase, right? So NVIDIA leads off this ETF, right, for the S&P 500. So it's one of the main stocks when we talk about large caps. These are some of our main stocks that we look to trade on a regular basis. These aren't the only names, but these are just some of the main ones. This is where you start, and you'll find the other, what we call auxiliary names underneath these ETFs. So you have your S&P 500 SPY right here. NVIDIA, Microsoft, Apple, Amazon, Meta, AVGO, Google, Tesla, right there. So that's your main ETF, one of your main ones, your S&P 500, your SPY. Now QQQ. You're going to come here to the holdings. And now you have NVIDIA, Microsoft, Apple, Broadcom, Amazon, Meta. You're going to see similar names that you just saw. You're going to see Netflix in this fold, Tesla, Alphabet. Now, this ETF has about 100 tickers here, right? The top 10 tickers make up 52%. So listen here carefully. The top 10 tickers make up 52% of this ETF. So what that means is that 10 names alone make up pretty much half of the move. So these 10 names pretty much are equal weight to the other 92 names that are within this ETF. So these 10 names are going to dominate, right? And really help the market go up or down. So if NVIDIA and Microsoft and Apple all go down, what happens to the market? The market goes down. If NVIDIA, Microsoft, Apple, Broadcom, Amazon all go up, what happens to the market? The market goes up. Now, if you want to take a look and see, okay, well, what are the other names that are lower right here on this ETF. Outside of it, you're going to see names like Palantir Technologies. You're going to see names like AMD. You're going to see names like your cell phone provider, T-Mobile, TMUS, right? TMUS. You're going to see names like Shopify. You're going to see names like ISRG, Intuitive Surgical, Qualcomm, Applied Materials, Adobe, Micron, Honeywell. So a lot of you guys may be familiar with a lot of these different companies. So what I would then do is I would take all of these names, right, and I would add them and start to what we call create a watch list. Now, I have NVIDIA pulled up here, but Yahoo Finance is going to be the main place that you want to actually go ahead and create a watch list on. So my suggestion is that you use Yahoo Finance via your cell phone or your iPad. You can use it via your desktop as well too. You could create an account, etc. My main recommendation is that you do that. So when it comes to looking at some scholarly information that you want to take a look on these tickers, you actually can do so. All right. So particularly here, when I'm looking at any stock, I could type in the ticker and I could also set an alert. This is one thing that I was having a conversation with somebody about a little bit earlier, but everyone here is going to be busy. I know there's some people that's probably on the road right now. I was seeing the videos in the chat saying they were saying, hey, I wasn't going to miss this class. Well, I'm greatly appreciative of you guys being 300 people deep in this class tonight. But let me tell you something. You don't have applications for no reason. It would behoove you to use your applications. Listen, we all are going to be busy. These stocks are going to move. So you need alerts. You're going to be in meetings. You're going to have to probably deal with your children. There's going to be a lot of things that you're going to do, but your money's at risk in this market. So if you don't have a mechanism to be alerted, because I don't stare at the computer screen all day. I just don't do that. But what I do is I leverage the tools and the technology that we have. One of the first things I asked when I came on the Zoom is I say, how many people like leverage? So why would I not use an application that can let me know if I'm in a trade on SMCI and I'm waiting for the stock to hit $40? You think I'm just magically just going to sit at the computer screen until $40 materializes? No. I'm going to put an alert. I've done my homework. I'm going to put an alert for $40 and $41 because I shouldn't even, if my target is 40, I shouldn't even have one for just 40. I should have one for 41 so I know when it starts to get close to 40. So you always want to utilize your alerts and setting price alerts, adding these tickers, favorited these tickers, follow, right? Develop a watch list. So all you have to do is take the tickers from here and add them to a watch list. A lot of people say, okay, well, how do I get started building my watch list? I just gave you an easy layup. You take the QQQ and the SPY, you come right here to ETF.com and boom, you input those and you start following all those tickers. You can't trade without a watch list. Why? Because you actually need to make sure that you are actually seeing movement up and downward. So you can't trade without a watch list. You need a watch list. It's impossible to trade without a watch list and alerts. So you need alerts. Hear me carefully tonight. If you're not going to set alerts, there's no reason for you to ever take a trade. And this is just standard because so many times people are getting into trades and they don't know what the stock is doing. Oh man, well, I wasn't paying attention. What the hell you mean you wasn't paying attention? Your money's on the line. You not paying attention to this instrument, where this stock price is at? Man, you treading dangerously out here. So directly taking these tickers and inputting them. Now, the last main ETF is your DIA, which covers your Dow Jones Industrial Average, right? So when you come to Yahoo Finance and you see right here, S&P 500, Dow Futures, NASDAQ, right? The S&P for SPY, You have the DIA for the Dow futures, and then you have the NASDAQ for the QQQ. And then you also have the Russell 2000, which is your IWM, right? So IWM, you can also add that as well too. But the three main ones, this is your Russell 2000 ETF, right? So DIA, we come, type in DIA, and we hit what? Holdings. Now you notice the Dow has just about 30. Now the Dow is a different makeup. The Dow is more of your value names. This is where you're going to see your value names here in the Dow Jones Industrial Average. You got names like Goldman Sachs. Microsoft is getting featured in this ETF. Caterpillar, right? Home Depot, Sherman-Williams and Company, Visa, McDonald's, AXP, Just Print Money. That's what we call JP Morgan around here. AMGN, Travelers Company, right? Then you hit View All. This is where you'll see IBM, also United Health. They used to be a bit of United Health beginning of this year, used to be number one. Unfortunately, we know what circumstances they've had, right? So your performance, a stock's performance, will directly impact its holding allocation. So United Health is a great example because United Health used to be number one. Where Goldman Sachs sits, United Health is now dropped on the totem pole. So the design of these ETFs is to have the best companies sit up top. That's the design. Your performance will directly be tied, as well as Boeing. Boeing used to be in the top 5. As you see, they're lower than United Health. And Boeing is not even in the top 10. The performance of the stock is going to directly be tied to where you sit. Now, some people may say, well, how is Apple and Amazon lower than Boeing and United Health? This would be a great question. You see, Apple and Amazon were what? They were higher in the SPY and the QQQ. You relatively saw both Apple and Amazon sit in the top 5. Now, the thing about the DIA index is the Dow Jones Industrial Average takes into account, yes, your stock price performance. So listen to this. The ranking of these assets is based upon highest stock price to lowest stock price. So this is why Goldman Sachs, a $700 company, is sitting here where it's at, right? Number one. This is why Microsoft trails it, Caterpillar, then Home Depot. This is why Home Depot is number 4. Home Depot is right now knocking on the door of $400. It's currently at about $387. Sherman-Williams falls behind. Visa, Mickey D's, AXP, Just Print Money, AMGN, IBM, United Health's at 250, Salesforce is at 240, Boeing's behind is right there around 229, Amazon is right here as well, right there around 223. Apple will probably take over Amazon depending on their performance. They're at 229 as well, right? So this is the main reason why you see this asset allocation like this. So the Dow Jones, once again, they organize you based upon your performance. Once again, organized based upon your stock price performance. So once again, say this, DIA, stock price performance, is how you get organized here. The SPY and the QQQ, it is also based upon your performance, but it's not directly tied to how expensive the cost of your stock is. All right. So holding allocation there. So you take these tickers, and that's how you would go ahead and now build your watch list. All right. Now, go to this. So we're going to go over some of my main strategies, right? So these are my option trading rules, right? Options trading rules. No 0-day options. Avoid options expiring, in my opinion, a lot of times less than 30 days, unless you're going to be a surgeon technical. Unless you're able to be a surgeon with the charts, you should never touch that. Always buy time. I prefer 2 to 9 months expiration. So you could buy contracts out till January of next year, till June of next year, right? So we always want to buy time. Why? When we focus on buying in the money, we want at least a 3-to-1 delta to theta ratio. Delta being how much per dollar that our option increases in value. Each dollar that is sold, the stock goes up $5, right? And we have a 60-cent delta. How much value did my option increase? Easy math. $50 times 6 is 300. So every contract that you bought should be up at least $300. Right? Higher probability and less premium decay. So we want to neutralize theta, because theta is the amount per dollar that your contract loses in value. Right? So I need everyone to get this. Theta is the amount per dollar, right, that your contract loses in value daily. So when we're buying calls or buying puts, those are considered to be theta negative trades. So we don't make money from theta when you're buying a call option or a put option. You lose money from theta. Guess what? Theta doesn't care about Saturday and Sunday. They don't care what you're doing on Saturday. They don't care what you're doing on Sunday. They still get theirs. And so this is why it's important to buy time. Number one, chart first, news second. Any trade that we take, we got to analyze the chart. We're going to have a real in-depth opportunity to go over the charts heavy tomorrow at 8:30. So make sure you're on sharp in the morning. We're going to have a really good opportunity to get some charting in before the market opens tomorrow. But you can't take trades without a chart. Well, I heard this news come out and I thought it was going to go up. And I asked somebody, well, did you check the chart? Nah, I just went because the news came out, man. And I was thinking that was good news. But you didn't see that level there. Nah, I just took the trade. Okay. Well, that's why you lost your money. You must chart first. News is always going to factor in, but we have to see charts match up, because there could be good news that comes out, but a stock is hitting a key level that it's not breaking above. One of my main things is no trading, usually for the first 10 to 15 minutes after market opening, right? So to give time, we never try to force trades. We never hop into any trades at open. Never hop into any trades at open. Now, this is my perspective for people, once again, just starting off. This is an example of strict stop losses, right? So we use the example of $1,000 at risk, right? So if you want to day trade, right, $1,000 at risk, day trades to me no more than 2 to 7%, right? So it should be no more. You're willing to lose no more than $20 to $70. Simple math there. Short-term swings. What classifies a short-term swing? This is where people should be taking notes. Less than 5 days holding means you're not willing to lose more than 10 to 15%. What does that mean? $100 to $150. So then you also have a midterm swing, right? 2 to 6 months out, right? 20 to 25%. So midterm swings, 2 to 6 months out, realistically, 20 to 25%. Then you have leaps. Leap options are any option that you have at least 365 or more on. My recommendation is 30 to 35%. Now, this ensures, once again, everyone has different risk tolerances. There's some people in here, you have no kids, it's just you're feeling risky. There's some people in here, have a wife, a husband, 2 kids, 3 kids, 1 kid, whatever. There's a lot more. Once again, you're in a different financial situation, right? Someone on their own may say, you know what? I'm going to be a little bit more risky. Someone in a different position may say, hey, I got to consider my risk tolerance a bit more. That's an important conversation for you to sit down with yourself and discuss with yourself tonight. What is my risk tolerance? Before even stepping into this game, figuring out, okay, am I able to be a high risk, or am I more moderate to low? That's an important conversation, because options trading is more medium to high risk, realistically, for medium to high risk people. All right. So within that range. Now, for buying options, when it comes to selling options, you could be more on the low to medium risk end as well, but definitely medium to high is going to be the variable. So these are conversations that you got to really think about for yourself up front, right? Before even thinking about jumping into options, right? Is particularly does this type of trading, right? You don't have to just day trade. So this isn't sit at the computer all day. That doesn't have to be what it is. We primarily focus on swing trading, right? So this is my beginner strategy flow. Number one, step one is to find a strong chart setup. We're looking for a breakout, right? A bounce off support. So we're looking for some form of a chart setup, right? In this example, choose a stock that you know well, right? I want to pick a in the money option. All right. So I trade a lot of times to keep it on step 2 and step 3. We trade the same stocks over and over again. Like we add some new tickers to the fold, but we trade the same stocks. I've been trading names like AMD and Tesla for 6, 7, 8 years now. So I'm trading, once again, the same tickers over and over again. I'm going to build that rapport. A lot of times people focus on trading too many things, and you haven't mastered trading one thing yet. This is where people push themselves down the rabbit hole, is they're not focused on, once again, trading, right? Smart. They're focused on trying to catch every move instead of focus on just being patient a bit more with themselves. So I would say 5 stocks, you want to choose, I would say 5 stocks that you are accustomed to, and you create your watch list around that. Not to say those are the only 5 stocks that you trade, but you have your 5 starters, right? What do you want to build your I would say, what do you want to build your franchise around? Like choosing 5 stocks. Like I'm comfortable to trade AMD almost any time. I love trading AMD. I built a great rapport with them. I understand their ebbs and their flows, right? Step 3, picking a in the money option with 2 to 9 months until expiration date. Once again, you have to pick a in the money option, not out the money. We talked about in the money options today. We'll speak about it again tomorrow. But in the money, size your position so one, you won't blow up your account. Step 4, size your position. What does that mean? Well, you focus on making sure that you're not over leveraged, right? So you don't never want to have your whole account on one specific position. You want to make sure that you keep some cash on the side and make sure that you're protecting yourself. Place a stop loss on a trade. Once again, stop losses help mitigate. You don't have to. Here's the thing. As a beginner, I think it's really good to do so. Once you get an idea of what you want your risk tolerance to be, and you understand your schedule, like I think it really depends on your schedule. If you're someone that's able to be more in front of things and watch things, then you're probably maybe not using as many stop losses, right? You also, when we go back to step 4, you don't want to be in too many positions at one time. So I find it sometimes when I'm speaking to people and they're in like 10, 15 different positions. Now, maybe different if we're talking about long-term investing. That's a different story. You buying and holding stocks, ETFs, that's a different conversation. You could do that, right? But when you're talking about trading and you're trading 15 different things, please never do that. You to be in 15 different trades, options trades at once, is a lot to manage, right? Especially if you got it all in one place. So to me, being spread like that, 15, 20 different, you're spread way too probably spread out, right? You're way too spread out. So this is one of the things that I see a lot of people go wrong with, is they're in too many positions. And in step 6, we like to sell into strength. So I want to explain this, right? What do I mean by sell into strength? When we see a target get hit and we're seeing the move actually take place that we wanted to see, we like to sell into strength. So let's explain this. All right. So let's go in here. and let's focus on selling into strength. What does that actually look like? Well, when a stock is going up or down and we have a position on a specific equity, let's go in and talk about this, right? So specifically, we're going to go to the channel here, right? And so scroll back, just give you guys some context and we'll scroll down. So we focus on seeing, right, sell into strength. I want to go back to here because this is super, super, super duper important, right? So this was on July 31st. So what we saw actually here was we are looking here at the VIX, right? The VIX actually shot up. So I want everyone to take these notes on the VIX, VIX, right? The VIX. The VIX is what we call the volatility index, right? So I need everyone to make sure that they are taking these notes on the VIX, the volatility index. The VIX is something that moves, right, as the market goes up and down. So when the VIX is going up, the market is pulling back here to the downside. So the VIX, write that down. The VIX goes up as the market comes down. So usually when we see the VIX break over 20, that's where we see a major move upward, right? Right? That's where we see a major move upward when the VIX breaks over 20. So in this example, we see here, right, where I highlight and say, okay, well, the VIX is at 16. I'm anticipating that the market could start to pull back down. We want to sell into strength. So the things, and the reason why I want to make this make sense is when we see the SPY going on a consistent run upward, right, where the market is running on all fumes and we continue to break out, eventually we're going to see a small pullback. So we want to sell into strength. What does that mean? When the market is green, those are the days we want to sell. And when the market drops, those are the days where you want to go on it buying, right? Just depending on how far the market may drop down. So when we say sell into strength, you don't wait until the stock drops to sell. No, you take profits. So on these options, when these stocks are hitting our targets, we're focused on, once again, taking our money off the table, right? So there's a couple positions, right? Scroll back down. One position that we're in right now is CrowdStrike, right? CrowdStrike puts, we highlighted SMCI puts here a second ago, but we have CrowdStrike here, September 19th expiration, right? 4:30, right? Or you can go out a little bit further, October as well, right? Now CrowdStrike's a little bit more expensive, 4:30 to 4:40 strike. Once again, in the money option. So CrowdStrike, CRWD, cybersecurity company, right? Crowd. What are our levels? Well, where did the 411 come from? So what we believe is that if this stock can break through this 419, right, we are now going to be able to see the stock price come down to 411 because that's our next level. So we don't take a trade. Once again, we never take a trade without looking at the chart and analyzing what's happening on the chart. So one, we buy time. We identify a chart setup, right? And in this chart setup, we believe that the stock price has the opportunity to come down here below 419 and could drop all the way down here to 411. So 411 is our target. So 411 hits, and my question to myself is saying, oh my gosh, what if it goes to 401? No, it hit 411. That was my target. That's what we call greed. A lot of times people get greedy in this game and they don't take their money off the table. And that's what really hurts a lot of people. Like, we're not looking to, we like base hits. Like, realistically, just get me on first and second base. I'll handle the rest. Like, you're not going to catch me. We're not looking to just keep striking out. No runners on bases. Let's just keep getting to first base, second base. Let's keep hitting a ground rule double. Eventually, we're going to come home. That's really our mentality when it comes to trading. A lot of people are looking for these home run hits 24/7, and it's not really realistic. It's the consistent base hits to get you there. Okay, cool, got there. Even taking in the football, dink and dunk, 5 to 7 yard outs, boom, let's keep the chains moving. We're not going to throw the ball deep every play. And what happens is a lot of times people over leverage themselves, trying to go big or go home. You ain't got to go big. You got to be consistent. Consistency wins. In this game, in life, in everything that you do, compound and consistency, right? So keep this open. Right? So why this works for beginners? Slower time decay, there's shorter options for buying more time. It gives time for the trade to work out. So that was one of the main things that I really focused on, was making sure that I actually give time for the option to actually work out, right? Like, you don't want to be this is not a rush thing. Gives a higher probability within the money options, and focus on repeatable setups, right? This is not gambling. This is focused on doing things consistently over and over, right? So higher probability when you focus on ITM options, right? Mistakes to avoid, giving you guys some things to think about tonight. Over leveraging, trading too much, chasing out the money lottery tickets, people looking to get rich quick. This is not the place for you. I'll tell you that right now, right? So there is no lottery tickets here. Number 3, ignoring your stop losses. Oh, well, or your take profits, right? Oh, well, I didn't have the alert set. Man, you got to have your alert set. This is your money at risk. And I asked you to download a Yahoo Finance account, build a watch list, and put the ticker on that you got your money into. You got your money on a stock option, right? And you don't have an alert. You playing the wrong game. You need alerts up and down, no matter if you're buying a call option, making money as the stock increases, or you're buying a put option. You need an alert. You need an alert. So I need you guys to understand that, right? Trading without a setup. Why would you be taking a trade and you don't see nothing on the chart? Oh, man, well, I don't see nothing right now, but I'm going to just hop in the trade anyway. Really? You don't see nothing on this chart, but you just putting your money on the table? Recipe for disaster. Also, another mistake to avoid is holding through earnings reports. So companies report earnings 4 times a year. Now, a lot of times people look at when it pans out well. Oh, man, well, the stock went up 10% after hours, or it went down 10%, made a lot of money. Once again, earnings blindly. Pay attention, key word, blindly, right? So you can hold an option through earnings if you are willing to assume the risk, and the risk could mean that you could actually, once again, one of the main risks that could end up happening is that now you are actually going to see the stock price pull back, and you're in a call or you're in a put, and the stock price bust through the upside. So when we say blindly, is you don't actually know when earnings are coming. Now, let me show you. You have a resource which is called earningswhisper.com. So you can always find out. I'm going to show you 3 different ways that you can find out when your stock is reporting earnings. You can look at the earnings calendar for the week. That's one. The second thing you can do is you can come over here to your TradingView account, and you see this E at the bottom. It's going to let you know when earnings are coming. So that's number 2 that you can do. So now you know Wednesday, right, the 27th of this month, they're going to be reporting earnings. So that's the second way. Number 1 was earningswhispers.com, right? Number 2 was TradingView by pulling up your ticker here on tradingview.com, having your account, typing in the ticker crowd, and you paying attention to where it says E, and it will let you know. The third way is for you to come in and type in CRWD on Yahoo Finance, and it will tell you earnings date, August 27th. So that's 3 days, right, that you are actually able, 3 ways, that you can actually see the same information. So this is what we call using your resources. So I showed you one here on Yahoo Finance, another one here on TradingView, E, and then earnings schedule right here. So no one should ever have a question on when is earnings for their company, because you have 3 different ways that you can do so, right? And you can avoid that disaster, right? That's the way you can do it. Let's go finish this thing out. So, summary: trade with a plan, rules, patience, buy time, buy quality setups, protect your capital. Once again, small, consistent wins compound into really big results. That's really the name of the game. Small, consistent wins compound into big results. And the last thing that I want to give you guys here for tonight is I want to go over some homework, right? So I want you to create a watch list. This is going to be your homework, right? Create a watch list of 5 liquid stocks and ETFs. So you were able to use that ETF.com, SPY, QQQDIA, ETF.com. Number 2, identify their trend using the daily charts. So make sure that you download TradingView and identify whether the stock is in a uptrend or a downtrend. So come in the daily time frame, and you can identify, you hit this right here, this drop down, and you hit daily, 1 day. So identify as a stock currently in an uptrend or a downtrend. Simple, it's in a downtrend right now. You can see that here plain as day, right? So uptrend, downtrend. That's what I want you to do. So of those 5 stocks or ETFs that you choose, determine their overall trend, right? Number 3, find an in-the-money call option with a 60 to 90-day expiration for a bullish name, right? Then write down an entry, a stop, and a target, right? So for number 3 and number 4, we're going to do that live tomorrow in the morning, right? So primarily just do 1 and 2. For those that are capable and are able to do 3 and 4 on their own, you can do 3 and 4 on your own. But I will, for those that can only probably do 1 and 2, that's fine. We will do all of these together tomorrow. So hopefully everybody got a lot out of tonight's first class. I'm excited for tomorrow's session. We'll have another great session, good time allotted tomorrow. And I'm excited to continue this process and really walk you guys through everything. I want to turn it over to Ramel, and I appreciate you guys for listening to me over the past hour here. So I definitely do greatly appreciate you guys.
My brother, hold up. Can y'all hear me? Can y'all hear me? If y'all can hear me, I'm gonna unmute everybody in about 3 seconds. And I need y'all to give my brother Lawrence some love if y'all felt like y'all got some value today. So in about now is 2 seconds. I hope y'all ready. I'm about to unmute y'all. And if y'all got some value, I need y'all to give him that love, y'all. So let's get it. Let's go.
Let's go.
Good shit, Lawrence.
Thank you so much, Lawrence.
Money man.
Hey,
Big
No.
You ass
thank you so much.
Let's go.
Bang.
That's great.
Thank you.
Wonderful class.
Let's go, Panther.
Money.
Thank you, bro. Thank you, bro.
Yes. Thank you so much.
1000%. I'm gonna just make some announcements and set some expectations for the rest of the next 3 days and how things are gonna go. But tomorrow at 8:30 a.m. Eastern Standard Time, we are back with Lawrence again, so he can show you live, right? Really in the mornings when the markets are open, how this works. Matter of fact, put a 1 in the chat if this is completely new information to you and you trying to pick up the pieces. Put a 1 in the chat. Put a 2 in the chat. If you're like, yo, listen, man, I've been getting money already. I didn't really learn the game from Lawrence. I already been able to get to the bag. Put a 2 in the chat. I just want to make sure we understand who's in this room right now. Okay, so we got a good mix. Most people, this is new information. So before you jump off, Lawrence, I just want you to give them a little bit of insight because I know this can be a lot, right? You know, looking at the charts, and some of us may get discouraged looking at these colors. Listen, ask me how you know. Me. Yes, it me. Yeah. So I can understand for anybody that's new that we may need to give ourselves some grace and know that we have to take the time to really study this and become a master, right? Nothing is going to happen overnight. But what we're doing here is really laying out the pieces, the foundation for you to get started in the game because these are the wealth principles, right? So you're going to learn this week stocks, you're going to learn insurance, and you're going to learn commercial real estate. These are the 3 wealth pillars that we need to master. We get these 3 things in place. That's how we talk about long-term wealth, not getting rich quick, but getting rich for sure. So, bro, before you jump and I make these announcements, can you give any just kind of words of wisdom really quick for those that put a 1 in the chat that this may be, you know, a lot for them to be able to take in day one?
Yeah, definitely. The things that I went over here tonight, I mean, they took me at least 2 years to really get, you know, comfortable and good at, right? I know we had some people who put tools in, who've been with me for some time, who've learned a lot of information. They understand that it takes time. Right. Anytime you get introduced to any new concepts, it's going to be a foreign language. Right. The technical aspect, when Ramel's talking about the technicals and I go over these technicals tomorrow morning, this is why I was I really pushed for that 8:30 tomorrow slot because I need the 8:30 to 10 to be able to go in depth, show you how to get prepared for the market during the pre-market, show you how you actually get to the 9:30 opening bell. Right. So the things that you need to download is simple. Yahoo Finance, TradingView. You need to go ahead and download Yahoo Finance and TradingView. You need both of those platforms downloaded on your cell phone, and you need them to actually be up on your desktop computer or your laptop computer, whichever one you're using. Right. So that's exactly what you need. TradingView and Yahoo Finance. But those are both of the platforms that you need. And to me, once again, like this really took time and it pays off in the long run. Like you have to put in the time on the charts and on the technicals to understand. Everyone looks at the end result, but you haven't put in the actual work, right? Super, super, super duper important. ETF.com, earningswhispers.com. So ETF.
Real quick, bro. Team, can y'all actually drop those links in the chat? So just kind of grab those links and drop them directly in the Zoom chat and drop it in the Telegram. So he said TradingView and he said Yahoo Finance. Grab those direct links. What's the other ones you said, bro?
Yeah, ETF.com and TradingView.
All right. So yeah, drop those in the chat, team, the exact links for them to be able to go click them.
Yep.
All right, bro.
And, yeah, so you know, those are the things that I would really say to people is just making sure that you're patient with yourself. Yeah, I just think it's, once again, super, super duper important to be patient with yourself. Do not get discouraged. It took a lot of time to learn this information. So that's why I break it down to make sure I'm just trying to make it as clear and plain as day as possible for people. Yep.
Absolutely. I appreciate you, bro. 1000%. Everybody type 8:30 a.m. in the chat to make sure we're clear. Tomorrow morning, 8:30 a.m., he's going to go more in detail, and then you'll be able to have some time allotted for questions, right? So just execute on the information. Let's do the homework, and let's show up. So everybody got that 8:30 a.m. All right, bro. I'm going to take you off the screen. Appreciate you.
No problem.
All right, perfect. So just some things that I want to just cover really quick, and we're going to close up. I just want to set some expectations. Those of you that's on here and you want access to the recordings, you must join the Telegram chat. In that Telegram chat, we're going to give you access, complimentary free, for 30 days into our school community. In the school community is where the recordings will be posted. All right. So, team, can y'all drop the Telegram link for everybody that may not be in the Telegram right now? Let's drop it in there really quick for them. And in that Telegram, like I said, we are going to give you access to the school, 30 days access completely free. So you'll have to sign up. You put a card on file, but it won't charge you, but you'll get access to the recordings. All right. And it'll be in there. It'll be inside the school, and we'll drop a video showing you exactly how to navigate it and get access to it. All right. So that's the first thing. The second thing that I want everybody to do, I want you to put this in your schedule. So over the next 2 days, because we have tomorrow and we have Tuesday, we have an 8:30 a.m. call, and then we have an 8:30 p.m. call. So it's going to be 2 calls per day. If that's clear, type clear in the chat. 8:30 a.m., 8:30 p.m. 8:30 a.m., 8:30 p.m. 8:30 a.m., 8:30 p.m. So it's 2 classes, all right? You're going to have a morning class because the markets are open at that time, and that's really where Lawrence gets busy. That's the best way to give you the real live experience. And then tomorrow night, we're going to go into Mailbox Millionaire Banking, which is leveraging insurance strategies. So when you combine these things together, that's how you truly build wealth. And then on Tuesday, we're going to go into the stock. We're going to go into storage units and how you now double up. All right. So that's what I want to make clear. The next thing that I want to do, I want to make sure that everybody goes in that Telegram chat, and I want you to drop a 30-second video of what you learned tonight or your biggest takeaway. We are going to be we're actually going to be giving away a grant. So it's going to be a $500 grant that we are going to be giving away at the end of these 3 days. And the person that wins the grant, they must qualify. I'm going to tell you how you qualify. So, right, get your pens and your pads. This is how you're going to qualify. And my team, we're going to put it in the chat, so don't worry. Number 1, you have to show up to every single class. That includes the morning calls with your full name. Full name. So we cannot track it if you just show up and it says iPhone. So we want you to show up on the Zoom with your full name, first and last, so we can track your attendance. That's the number 1 qualification. You have to show up every single day. Number 2 is going to be completing all of the homework assignments. So when Lawrence gives you a homework assignment, myself, anybody in here that gives you homework assignments, you complete it and then you post it in Telegram. We're going to be tracking this. And then number 3, there's going to be an application for you to actually apply for the grant. So it's going to be 3 ways to qualify. If you got that, I want you to put it in the chat. What are the 3 ways to qualify? I want to make sure we're on the same page. What are the 3 ways to qualify? Let me know in the chat. Let me know in the chat, y'all. Let me know. There we go. The 3 ways to qualify. Show up on the classes, both of them. Do the homework assignments, and then complete the application. Once we give the application, we'll drop it tomorrow. So there we go. It's going to be a $500 grant that we're going to be giving away at the end of the summit. It's a 3-day summit. All right. So that's it. We're going to close this thing up. I'm really excited. I hope you are excited as I am, as Lawrence is, because this information has truly changed our lives. And we put together summits like this because the truth is, there's wealthy people that's been making millions and billions of dollars for decades, but they've been gatekeeping. They don't share this information. I know where I come from, where Lawrence come from, they didn't teach us this stuff growing up in school, right? Somehow they erased and scraped us out of the textbooks, and they told us how to dissect frogs instead of how to look at charts. Instead of teaching us how to build our credit, teaching us how to invest. For somehow this information they gatekept. So when people say, why are you online teaching? Well, if we don't go online and teach them, how are you going to pick up the information? How do we get to that next? Somebody got to share it. So all we're doing is sending the elevator back down. All we're doing is saying we've been able to acquire some things. We've been able to get some wins. We've been able to go out there and do some great things for our family. We just want to send the elevator back down. And the only thing that we require is for you to show up and give it your all. So that's going to be an expectation that I set. I need you to play all out. So when I say play all out, that means not only showing up for every class, but also showing up with your camera on. Because we're going to teach you how to go get to the money. But there's no way you're going to get the most out of this if your camera is off. That tells me that you are not playing all out. I'm just being honest. If I'm right, just somebody put right in the chat. I need us to play all out, leave it all on the line. It's 3 days. We give everything to everybody else. This is about you. We know how to go and gossip with family and friends. We know how to go on vacation. We want to do everything else. But for the next 3 days, can we give this our all? Can we do that? If we could do that, somebody type commit in the chat. Somebody type commit in the chat. The school is completely free for 30 days. So you can cancel at any time, but it's $97 a month after that if you decide to stick around. All right, so I need us to commit, play all out. The second thing is, please give yourself grace and understand that it may not make sense. Because if it made sense to you, you would already be doing it. So give yourself grace. Don't try to consume everything and think you're going to be an expert overnight. Please give yourself grace. Let's connect. Let's build. Let's network. But also understand you have the great mentors that you invested to actually join this, whether it's your time, and I want you to be able to get the most back. Is that clear? Just let me know if that's clear. All right, there we go. So we're going to play all out. We're going to understand that it don't make sense. And the next thing I want us to do is move with speed. Somebody type speed in the chat. Somebody type speed in the chat. And Lawrence could attest to this. He knows this. Listen, when we going out there and we investing in the markets, it's about speed. We can't be sitting on our hands. We got to move quick and see what's happening. So when we tell you what to do, if you're sitting on it, you might miss that opportunity. So we got to get in the mindset of moving with speed. Fast, swift. All right, so that's it. I'm going to leave it at that. Team, one more time, can you drop the Telegram in the chat for everybody to join the Telegram? Again, go in that Telegram, drop a 30-second video. What was your biggest takeaway tonight from my brother Lawrence? And we will be back tomorrow, 8:30 a.m. Eastern Standard Time. It's the same Zoom link as well. So I know y'all probably going to be in the chat. Yo, where the Zoom link? This is the same. It's not changing. So take the Zoom link, put it in your calendar, save it somewhere, put it in your notes folder. It's the same Zoom link. We're not changing it up. I don't want to hear nobody say, yo, Lawrence, Mogul, where the Zoom link at? It's right here. Y'all got me? Y'all got me on that? Let me know. All right, so we good. All right, with that being said, I'm going to give y'all back your time. Get some beauty sleep. Let's be up bright and early, 8:30 a.m. Lawrence will be back breaking down the game. And I'm going to unmute y'all one more time. And I listen, I need us to go out strong. Like, I'm just being, y'all listen, y'all know high energy means high income. So I need us to have the same intensity that we want to have when it comes to our bank account. I need us to have the same intensity that we have when it comes to being able to break the curse of poverty and put our family in a better position. So when I unmute y'all, I need that energy because we're going to give it back. We're going to reciprocate. We're going to give you what we got, but we need you to meet us halfway. So we're going to close out strong and we're going to unmute everybody. And I want y'all to make some noise and we'll see y'all 8:30 a.m. Eastern Standard Time. Let's go.
Let's go.
Now time.
Let's go.
Time like the money.
Let's go.
Thank you. Thank you.
So much, y'all.
Yeah.
Let's go.
I got business, credit, real estate. Got some assets on the market from recession up to date. I got business, credit, real estate. I just got some life insurance and the trust and family trade. I got business, credit, real estate. Got a contract and agreement with the signature in place. I got business, credit, real estate. I got some funding for the business with a lower interest rate. I got
get your LLC. You gon' need an EIN. You get verified online. A few more
steps, you be right in. Get your head set in the game. We gon' need you to buy in. Execution is the loophole with the strings that we tie in. Business bank account and the number for DMB. Passive income like them bills, cause right now I'm seeing 3. Making plays just like the playoffs, but this ain't on TNT. Then the knowledge is the source, you could get the season free. You go from renting to a mortgage, Wofford ain't no shortage. Build with your supporters, multifamily or self-storage. I salute and I applaud it. If you learn the game and taught it, not that have you can't afford it. Dropping Jews and I just called them. I got business, credit, real estate.
Got some assets on the market from recession up to date. I got
business, credit, real estate.
I just got some life insurance and the trust and family straight. I got
business, credit, real estate.
Got a contract and agreement with the signature in place. I got
business, credit, real estate.
I got some funding for the business with a lower interest rate. I got
forget about your past, banks is giving out the bag. To stand on those investments, you gon' need to sit in class. It's a method to the madness, Navy Federal a classic. So much of a credit unions you could get a bag with. Swerving in the traffic, merge right in the platinum. Use one inquiry, 5 cars, you can stack a strategy. I pay the fee, learn the game from A to Z. Business pays up ADP, cashback so it stay with me. Shopify, Stripe, wholesale and get right. Start a business overnight, you could take off like a flight. It's about that time, salary to 99. Got a new course I've been trying. If I do this, I'll be fine. I got business, credit, real estate.
Got some assets on the market from recession up to date. I got
business, credit, real estate.
I just got some life insurance and the trust and family straight. I got
business, credit, real estate.
Got a contract and agreement with the signature in place. I got
business, credit, real estate.
I got some funding for the business with a low